right,
Okay.
it is top of the hour. It is 6 March 2025. I want to welcome everybody. Today we are going to be discussing FACTA and CRS, give some some health checks and some practical guidance. We are very privileged to have Avril Bell with us. She is joining us from South Africa. Avril has been with us, been in this space since 2010, right? Just specifically on FACTA CRS. Is that correct, Avril? Right. And
2011.
2011. Okay. And I want to thank Transworld Compliance as well for putting us in touch because they have always been the people I go to when I had FACTA and CRS questions because they seem to know everything. And yes, so this is very much, thank you very much for joining us. And so we're going to get started. I'm going to start some housekeeping and then we will kick off. So some housekeeping, just remember this is informational purposes only, not legal advice. If you do have any specific questions, you can post them in the question box. We will try to get to them, but as many of you know who join us regularly, we often run up to the hour because there's always so much information to share. Certificates of attendance will be automatically generated. We do try and last about an hour. And of course, we are recording this and we will make the recording and slides available to all registrants. So if you're not listening live and you're listening to the recording, you can also get the certificates as well. And I think that is it on the welcome. Like I said, don't forget there is a handout if you are in Bermuda, BVI, Jersey, or Isle of Man. There is a handout that gives specific updates for you guys. And I think that's it. We can get started. So Avril, just tell me if I'm not moving fast enough on the slides. And again, thank you very much. And just for those of you who know, our speakers and our guests, we don't pay them, they don't pay us. So this is, them taking the time, volunteering their time to share this information because they know how important it is. So again, thank you, Avril. I really do appreciate you sharing your time with us. Okay.
Thanks,
So,
Kimberly. Could we perhaps pop the polls on screen first before we begin? I just want to get a better
okay.
understanding of the audience.
Yeah. Tom. Okay. Yeah. So we have first two polls. And the first one is like, we just kind of wanted to ask what jurisdiction that you are in. So right now it looks like and I couldn't get very specific, like I couldn't say, if you're from Cayman, because we only get so many options, but the majority will be probably the Caribbean. Yeah, so we've got two people so far in the UAE. We've got, it looks like about 6 from North America. And then about 20 from other, and then Caribbean and Latin America. That is, again, 73% of our audience. Is there anybody that you're specifically wanting to know about, Avril, like any specific countries?
No, I just wanted to check where the audience is from, so I can possibly
Okay.
focus my slides when I speak about it or make reference to things for that. I think the majority jurisdictions, so that's the Caribbean, so I'm fine with that. Thank you so much.
Okay. Yeah, no problem. And the next poll, Tom. And yeah, what role do you play in the due diligence and reporting chain? So are you involved in client onboarding? Do you or do you focus on FACA and CRS? Are you submitting reports? Are you a client-facing relationship manager? And other, I think the other would probably be if you're in senior management. So you're probably here trying to find out what you need to know. Okay, we've got a good, very, almost an even split. We've got about 25% in client onboarding, 25% in FACA and CRS due diligence reviews, just over almost 30% in the other. So I'll consider them kind of either IT, you could be IT related, or senior management, and then client facing and report submissions, like I say, a little bit less. Client relationship managers only 6%. Fantastic.
Cool.
And I'm going to turn off my camera too while you're speaking on this. So thank you everyone for answering that.
Yeah. Thanks everybody for responding to the poll questions. I see we have a lot of people in onboarding and client due diligence. So what I'm going to do now is I'm also going to switch off my camera so you guys can focus on the slides as we go along. And then just as I'm also speaking, if you have any questions, please post them for me. I'll try and get through the slides within about 40 minutes, so there'll be some time to spare. So the topics we'll cover today is basically a FATCA and CRS recap, due diligence procedures and compliance, key terms and definitions, reporting, and then, as Kimberly mentioned, updates in BVI, Isle of Man, and Jersey, and a little bit of Bermuda if we have time for that. But we'll look at audit red flags first, and then I also received some pre-webinar questions, which I've answered as part of the webinar. And then I've also just included abbreviations and acronyms for your review afterwards. So we'll just go through just pass through them completely and start with what FATCA and CRS is. Thank you. So yeah, there we go. So FATCA and CRS is an extension of anti-money laundering, and I think this is a really good platform for us to have with silo compliance because they deal with anti-money laundering. So to understand that it's an extension of anti-money laundering, FATCA and CRS highlight non-compliance with AML. Both regulations aim to drastically reduce financial crimes such as tax evasion through the use of financial accounts by account holders. These regulations define the due diligence procedures that the financial institutions must follow to identify their account holders and their tax residencies. The collection of self-certifications are very important as AML does not require the collection of tax numbers and tax residency. Next slide, please. So moving along to the due diligence procedures and compliance. So when we are trying to identify individuals for both FATCA and CRS, there are certain data elements that we need to look at. So where you would review information and find a tax residency and TIN for, say, the US or a CRS reportable jurisdiction, then that individual will be reportable for either FATCA and CRS. US citizenship, nationality, and place of birth only applies to the US. It does not apply to CRS at all. So these are not indicia for CRS. I'll repeat again: citizenship, nationality, or place of birth. And where we find this indicia for a US account holder, they can cure that account, which means that they are not actually tax resident in the jurisdiction that in the US, for example. They will need to prove that they are not tax resident by providing 3 different documents. That could be the self-certification or W-8 BEN for individuals, a copy of their foreign passport, and a certificate of loss of nationality or a reasonable explanation as to why they are not tax resident in the US. Following on to the next slide. Two more sets of indicia. So now we focus on the addresses. It could be mailing address, residential address, PO box address, or a telephone number in a particular jurisdiction. Where we find these data elements and the account holder claims not to be tax resident in that particular jurisdiction for both FATCA or CRS, they would need to provide a self-certification, W-8 BEN, and government-issued documentary evidence. So the example of that could be a utility bill, or again, a copy of their passport or driver's license. So moving along to the next slide. The next couple of indicia we'll look at. First one is a standing instruction to transfer funds to an account maintained in the US, or for CRS, a standing instruction other than with respect to a depository account to transfer funds to an account maintained in a reportable jurisdiction. So here again, the account holder, if they claim not to be tax resident in the jurisdiction of the standing instruction, then they need to provide two sets of documents, being the self-cert or W8-BEN and government-issued documentary evidence, whilst with the current effective power of attorney or a signatory authority, they will need to provide a self-certification or government-issued documentary evidence. And then on to the last bits of indicia that we need to look out for. So the final one is the in care of and hold mail address. So where an in care of or hold mail address is found that is within the US, and that is the sole address, excuse me, that the reporting financial institution has on file for that account holder, then that account will be reportable for FATCA. Sorry, I'm just taking a drink of some tea to keep my throat lubricated. That person, if they claim not to be tax resident, where the in care of a hold mail address is, will need to provide a self-certification W8-BEN or government issued documentary evidence. With CRS, things are slightly different here. It's where if you find an in care of address or hold mail address with no other address for a pre-existing account, then that account will be deemed to be undocumented unless you can obtain a self-certification for that particular account holder. With looking at this indicia, AML KYC documentation must be reviewed as part of the indicia search, and enhanced due diligence is required on high value accounts with values larger than 1 million US dollars. Moving across to the next slide, please. So I mentioned undocumented account in the previous slide, and there's specific criteria of what an undocumented account is. It is a pre-existing individual account where the reporting financial institution has no current mailing, residential, or PO box address for the individual. The only address on record is that of either an in care of address or a hold mail instruction. Whilst most guidance focuses on pre-existing individual accounts being lower value accounts, where the account balance is less than 1 million US dollars, there are instances where the pre-existing individual account may be a high value account. The concept of undocumented accounts applies to CRS only, and where the account, you've determined that the account is undocumented, you will report that account as a domestic resident to your home country tax authority. Moving along to the next slide. So now we look at how to identify entities to see whether they are reportable or not. So there are a myriad of addresses that you would need to look into to see whether an entity is reportable. That could be their place of incorporation, their mailing address, their principal office, their registered address, or any other address that they would provide as part of their onboarding. So if you want to cure an account where the entity states that they are actually not tax resident in the particular address they provided, they must provide a self-certification or IRSW series form. In certain instances, especially with reference to CRS, you may look at publicly available information that is from a trusted source, such as a government website, that will provide you with clear information on what the entity's classification is and whether it meets that particular classification's full criteria. With FATCA, it's a bit more lenient because, for example, financial institutions, there's an IRS FFI list, so you can rely on that IRS FFI list for FATCA. Moving along to the following slide, please. So last year, the OECD updated their frequently asked questions with reference to when one can use publicly available information. So whilst the self-certification may cover curing on their own, publicly available information must be backed up by self-certification for CRS purposes when checking whether an entity is a financial institution when using the IRS FFI list. So you cannot rely solely on that IRS FFI list to identify the entity as a financial institution. They must also provide a self-certification. The reporting financial institution may rely on publicly available information without a self-certification, where the entity is a regulated active non-financial entity, such as a listed entity. Okay, moving along to the next lot of indicia. So please stay on the slide.
Yes.
Um,
I was gonna say there's a little bit of delay I could tell, so I was trying to beat that delay
no
there.
problem.
Yeah.
No problem. So other indicia that you could check to see whether an entity is reportable or not. Where you find tax residency and TIN, that entity would be reportable based on the jurisdiction you found them in. And then I've just gone to two entity types, which is not necessarily listed as part of indicia searches in the regulations, but it's very important. So for FATCA, where the entity is a passive non-financial foreign entity that has individual controlling persons who have US indicia, then that entity and its controlling persons will be reportable for FATCA unless you go through the curing procedure for those individuals and find that they are actually not tax resident in the US. For CRS, a PNFE that has individual controlling persons who are reportable, or a PNFE that is reportable will be included for reporting. And the way they can cure the accounts is by submitting a W8 bin or self-certification for their controlling persons. So that would remove the controlling persons from the list. But for CRS, just remember to also check to see whether the entity itself is in a reportable jurisdiction. And then secondly, with trusts for the US and FATCA, a trust established under US laws with US persons who control all the substantial decisions of a trust, that would mean that the trust is reportable for FATCA. Then, with reference to CRS, the location of the trustee and the trustee's tax residence determines where the trust is to be reported, because trusts are transparent entities. And again, if the particular entity wishes to cure that position of tax residency, they will need to provide either a W8BNE or self-certification. As with individuals, please ensure that you compare your AML KYC documentation to anything you've collected for FATCA and CRS to ensure its reasonableness. Thank you so much, Kimberly. Next slide.
Great. And just to point out the passive non-financial foreign entity, you do give a further, a full definition of that for those who are asking what that means. Um,
Yes, I
so
do.
just, yeah, please stay in touch there. Somebody is asking too about for CRS, some countries do not issue TINs. You're also going to address that, correct? Later.
So with TINs, where countries do not issue the TINs, you would look to see with individuals, for example, the IRS is one of the few that provides jurisdictions that do not issue TINs. So that would be Cayman, BVI. I'm trying to remember the other two now. Australia doesn't require the collection of TINs. I can't remember the other two off the top
Mhm.
of my head, but with CRS, you would need to check the OECD's website that is archived with reference to whether a particular jurisdiction issues TINs. So there are certain instances where, depending on the taxpayer or the individual, they may not be required to register for a tax number, and it all depends on that jurisdiction. So your best bet is to actually check the information provided by jurisdictions on the OECD's portal to ensure that you do collect the relevant information, but also to remember that if you cannot collect the TIN, perhaps request that the account holder provide an equivalent. It may be termed as something different in their country. So just to also bear that in mind.
Okay, thank you for that. And I do see a lot of questions coming in, but I'm going to try and hold off until the very end. So everyone, please do proceed to just go ahead and post your questions. And also for those asking about slides, we will be sharing the slides, don't worry.
Cool. Thank you. So the account thresholds between FATCA and CRS, FATCA has a lot of minimum account thresholds, especially for pre-existing accounts, and they dwindle quite a bit for new accounts. While with CRS, there's only one minimum account threshold, and that is for pre-existing entity accounts of 250,000 US dollars. There is no minimum account threshold for CRS. And also, just bear in mind that with reference to these account thresholds, a financial institution can elect to ignore these thresholds and just basically review all accounts if that would make it easier for the financial institution instead of trying to implement the account balances as well. So the pre-existing date for FATCA, especially for pre-existing account holders, is the 1st of July 2014, whilst with CRS, it will depend on your jurisdiction. So for Cayman Islands and BVI as an example, that would be the 1st of January 2016. So any account opened after or on or after the 1st of January 2016 would be termed to be a new account, while anything opened pre 31 December 2015 would be a pre-existing account. Okay, moving along to the next slide. So besides looking at your account holders, certain entities may offer excluded accounts, and these are accounts that are considered to be low risk of being used for tax evasion, and they may be excluded from reporting. The following types of accounts are not subject to FATCA or CRS reporting. So we have certain regulated savings accounts that are tax favored, that have an annual contribution limit of 50,000 US dollars and levy penalties for early withdrawal. So examples of these types of regulated savings accounts would be educational savings or medical savings accounts. Then we have certain regulated retirement or pension accounts that are also tax favored, have an annual contribution limit of 50,000 US dollars or a lifetime contribution limit of 1 million US dollars. And these types of accounts levy penalties for early withdrawals. So, under normal circumstances, withdrawals would occur when the individual reaches a specific age, such as retirement age, disability, or death. If you make a withdrawal before retirement age, that particular account will levy a penalty for early withdrawal. And the three last ones are life insurance contracts and a life insurance. If I take out a life insurance contract on my life to benefit my children, I would die to evade tax. So it is not a good tax evasion vehicle. And then deceased estates are excluded from reporting. However, beneficiaries of deceased estates must be reported where they receive a transfer of assets or a distribution. And finally, certain escrow accounts are also excluded from reporting. Next slide, please. So, to summarize, who to report: individual tax residents of the US and/or CRS reportable jurisdictions, passive non-financial entities who are tax resident in reportable jurisdictions for CRS, and PNFEs with controlling persons who are tax resident in the US and/or reportable jurisdictions for FATCA and CRS. Certain US entities are reportable for FATCA and certain active NFEs are reportable for CRS. Next slide, please. Moving on to key terms. So one of my pre-webinar questions was, what is a foreign financial institution? So there are four different types of financial institutions. The first one being a depository institution. And I've gone with the long definition that is in the FATCA regulations, but I see it's also been updated as part of the CRS amendments that were released in 2022. So the entity accepts deposits or other similar investments of funds and regularly engages in one or more of the following activities: makes personal, mortgage, industrial, or other loans, or provides other extensions of credit, purchases, sells, discounts, or negotiates accounts receivable, installment obligations, notes, drafts, checks, bills of exchange, acceptance, or other evidence of indebtedness, issues letters of credit and negotiates drafts drawn thereunder, provides trust to fiduciary services, finance foreign exchange transactions, or enters into purchases or disposes of finance leases or leased assets. Now let's look at the income that a depository institution could earn. On to the next slide, please.
Quick question. What about
Yep.
credit cards, credit card holders?
Credit cards,
Like if a
they
financial institution produces or gives,
if
kind of gives out credit cards, would those credit card holders fall into a reporting
so
person?
if they provide credit cards specifically, the account holder must not be able to prepay their credit card over 50,000 US dollars, and if they do, the money must be returned to them within 60 days. Um, so that then would exempt the particular entity from reporting, but this is over and above. So it's not specifically mentioned here, and I think credit card issuers are separate to depository institutions. If the credit card issuer accepts deposits and provides one of the activities listed below, then it would be a depository institution.
Okay, thank you.
Okay, so for custodial institutions, um, the entity holds financial assets um, for the benefit of one or more other persons as a substantial portion of their business. So, how do you determine if whether it's a substantial portion of the business? You look at the entity's gross income with reference to the holding of financial assets, and it's the shorter of the two periods mentioned below, 3 years, or if the entity's only been in existence for 2 years, then it would be 2 years. The income earned by a custodial institution includes income attributable to holding of financial assets and related financial services, means custody, account maintenance, and transfer fees, commission and fees earned from executing and pricing security transactions, income earned from extending credit to customers with respect to financial assets held in custody or acquired through such extensions of credit, income earned on bid-ask spread of financial assets, and fees for providing financial advice and for clearance and settlement services. I know I'm going through income earned quite a bit, but it's very important when trying to make this determination with reference to the classification. So the next type of financial institution is an investment entity. And here I've tried to simplify the definition into my own words because I find the definition a bit confusing. So there are two types of investment entities. An entity that provides the service of portfolio management, investment advice, trading in financial assets, and financial assets under administration, all for a fee. This first type of investment entity will meet the criteria of the classification if its gross income from providing these services amounts to more than 50% of its total income. That is, most of its gross income must be earned from service fees. The second type of investment entity is one which engages a financial institution, so that could be a depository, custodial, or an investment entity for the above services with reference to financial assets. The second type of investment entity must also meet a gross income test where its gross income from holding professionally managed financial assets must exceed 50%. That is, most of its gross income must be earned from investment income due to its investments in financial assets. Moving along to the last type of financial institution. Next slide, please. Is a specified insurance company. So it's a company that issues and makes payments on cash value insurance contracts or annuity contracts. So the term cash value excludes insurance contracts such as life cover, short-term insurance cover, medical cover, and disability cover. These types of policies are not reportable. Okay, moving along, I think we've got the definition of passive non-financial entity next.
Yes, we do.
Thank you. So I haven't gone into the definition of an active NAV because it would take too much time out of the hour that we have together. So I've gone straight into the definition of a passive non-financial entity. So where an entity neither meets the definition of a financial institution or an active non-financial foreign entity, then it must be classified as a passive non-financial foreign for FATCA entity. CRS expands the definition of a PNFE to include investment entities, or the second type, that are tax resident in a non-CRS jurisdiction whose financial assets are professionally managed. Individual controlling persons of PNFFEs must be identified and reported whether they are tax resident in the US or a CRS reportable jurisdiction.
Okay.
Next slide,
That
please.
one it probably is
Yep.
giving everybody a bit of a headache trying to figure that one out. Um,
Okay.
so we might,
So,
I'm already seeing a lot of
yeah,
questions. What I might do is when we get to Q&A, we might have to come
yeah.
back to this slide.
I
'Cause
can I can give you I can give you a very quick 30-second explanation, and then I
okay.
can answer more detailed questions afterwards. So when you're looking at the definition of a financial institution or any entity, you're trying to determine if an entity is a financial institution. So you'll go through the definitions, and where it doesn't meet any of the criteria there, then you move on to the definition of an active NFE, and then you'll go through the definition of um, what kind of income is it earning? Is it a business operation? Is it a government entity, central bank, so forth? Is it a group holdings company for a group of active NFEs? Is it a startup? You'll go through all that different criteria, and where you cannot meet that definition 100%, then that particular entity has to be in a PNFE because it hasn't met any of the criteria of the 5 different types before then, being the 4 financial institutions or an active NFE with its various paragraphs. So I'm going to
Okay.
move along to the next slide.
Thank you. Might need a flow chart to help us through that one.
Yeah, it's quite difficult.
Okay.
Okay. So when we speak about a controlling person for FATCA with reference to the IGA, for corporations it's 25% in vote or value. For partnerships it's 25% of profits or capital. Excuse me. For trusts it's 100% of beneficial interest for anyone who has control over the capital of the trust. It must be an individual who acts in the capacity as a settler or grantor, protector, mandatory beneficiary, or individual trustee. Discretionary beneficiaries have no control, will have 0% beneficial interest in the trust. That is a zero account balance. Next slide, please. So for CRS, control is slightly different. So for corporations, it's 25% in vote and value unless domestic legislation states a lower percentage. So for BVI and Cayman Islands, that percentage is 10%. Partnerships, 25% of profit or capital unless domestic legislation states a lower percentage. And again, for Cayman Islands and BVI, that is 10%. For trusts, 100% of account balance must be assigned to an individual who acts in the capacity as either a settler grantor, protector mandatory beneficiary, or individual trustee, regardless of whether they have control over the assets or not. Discretionary beneficiaries have no control, will have 0% beneficial interest in the trust, so therefore zero balance, but you will report their distributions when they receive them. Next slide, please. Okay, so there we go. So when do you obtain a self-certification? So I mentioned earlier that new accounts for the Caribbean is from the 1st of January 2016. So any new account opened after that date must be accompanied by a self-certification. You must also collect the self-certification where the TIN, country of tax resident, date of birth, and or address are missing from the pre-existing account holders' details on your electronic database. The reporting financial institution must make attempts to obtain missing information at least once a year. All communication attempts must be documented because the regulator might ask for that later as proof. The next one is where an account holder has a change of circumstances. The RFI has 90 calendar days from when it first became aware of the change to obtain a new self-certification, and I will go into change of circumstances a little bit later. Next slide, please. So, what makes a self-certification valid? So you've now obtained a self-certification, you need to ensure that it's valid. And you will do that by making sure that the following is on the self-certification: name, tax residence, country and TIN, address and date of birth for individuals, legal name, tax residence, country, TIN and address for entities. Signature or positive affirmation. The form may be verbally, electronically, and digitally affirmed. FATCA does not accept verbal affirmations. The form must be dated. The self-certification may be signed by an authorized signatory, person with power of attorney, directors, partners, or trustees, and they may need to annex the relevant documentation showing that they have power of attorney to the self-certification. Self-certifications of entities must include their FATCA and CRS classifications. A PNFE must identify its controlling persons, and the self-certification must be verified against AML, KYC documents, and any other documentary evidence to ensure its reasonableness. Next slide, please. So, what do you do if you have reason to know that the self-certification is unreliable or incorrect? So, what does it mean when I say a self-certification is unreliable or incorrect? It's where a reasonably prudent person would question the claim being made by the account holder, where the AML KYC information and documentary evidence conflicts with the self-certification. Documentary evidence must be clear. The account holder's picture and signature must match other documentation collected, otherwise the documentary evidence may not be relied upon. Where a pre-existing account holder opens a new account and the details on the new account opening documents do not match the existing information on record, and where a financial institution provides its GIN on a self-certification, you must verify that GIN against the IRS portal to ensure that it is still active. Where you have reason to know that the self-certification is unreliable, then you must contact the client to obtain reasons for any differences. The account holder may need to complete a new self-certification where errors have been made. Moving along to the next slide. So change in circumstances. The following are change in circumstances for which RFI must collect a new self-certification: a change in country for tax residency, physical address, or telephone number; change from a lower value account to a higher value account where documentation has not been refreshed in 5 years; an inactive beneficiary receiving a payout. Details of the beneficiary must be reviewed to ensure they are current; reactivation of a dormant account. Account holder details must be reviewed to ensure that they are current; new information received for an undocumented account, that is, the account holder has finally provided a self-certification form; changes in an entity's account holder's classification. This means that the entity may become reportable or non-reportable based on that change; change in a PNV's controlling persons; and change of trustee and or controlling persons for a trust. Next slide, please. So what do we report? This will go rather quickly. So account number of the account holder, first name and last name, primary residential address, of which city and country code are mandatory fields, TIN and code of country that issued the TIN, date of birth, account holder type, account balance and currency. Negative balances must be reported as null balances. Any distributions such as dividends, interest, other income, and or gross proceeds and the related currencies, whether the account is closed and whether the account is undocumented for CRS only. Moving along to what to report for entities. So next slide, please. Very similar to the individuals, its account number of the account holder, the entity's legal name as it appears on incorporation documents, which you should have collected with reference to AML, business or registered address of which city and country code being mandatory, TIN and code of country that issued the TIN, account holder type, where the account holder type is a passive non-financial foreign entity that has reportable persons, the details of the controlling persons, and the controlling person's type must also be included for CRS. Where only the PNFE is reportable, then only that entity's details, account balance, and currency. And again, negative balances must be reported as null balances. Dividends, interest, other income, gross proceeds, and the related currencies, and whether the account is closed. Next slide, please. So with reference to the reporting financial institution, you need to identify yourself as well, and that would be your name, your address, and an identifier such as a GIN, a tax ID, or a portal ID. Next slide, please. So one of my pre-webinar questions was with reference to what happens if you are unable to collect a US TIN from a specified US person. The IRS has provided relief for Model 1 FFIs for 2025, 26, and 27, after which stricter measures will be implemented by the US. This additional time provided by the US is to ensure that Model 1 FFIs are not unnecessarily treated as significantly not compliant in terms of their IGA when it comes to obtaining missing TINs for its pre-existing US account holders. There are a few additional requirements that Model 1 FFIs must follow, and I've included a link to my blog that you can read once you receive the slides. Alternatively, also see the IRS FAQs for the substitute codes, and that would be reporting FAQ 6. I've also included the link, which you can check after the webinar. The IRS system will still generate an error, so don't be surprised when you receive one, to notify to indicate the entry is invalid when one of the above codes has been used. The error notification will provide 120 days to correct the issues. If the TIN is not provided within a 120-day period, the US will evaluate the data received and whether there is significant non-compliance based on the facts and circumstances. So where entities are not reporting directly to the IRS, a notification will come via your home country tax authority. And then the last thing you need to bear in mind with reference to reporting is when you have joint account holders, that the full account balance as well as the full distribution amounts must be assigned to each joint account holder for both individual and entity account holders that have joint accounts. Moving along. So another question that we received with reference to what happens to the information after I send it to my tax authority. So once the reporting financial institutions have completed their annual submissions, tax authorities then compile and share the information with other tax authorities. The receiving tax authority will compare the CRS data to their tax residents' submitted income tax returns, where the information provided through AEOI highlight missing information on the account holder's income tax submissions, then that taxpayer will be audited by their tax authority. And then also in addition to that, reporting financial institutions that submit late submissions or do not file the returns that they are obligated to report, they will attract penalties and interest from their home country tax authorities. Moving along to the next slide.
Thank you. So this is this area we're going to skip over
Yeah, that's fine.
and come back to. So this is the handouts for those who are in Bermuda, BVI. You've got some updates, but I did put those as a handout so you can print them in case we run out of
So
time.
we can
And Isle of Man,
move straight to the red flags.
Yes, because I think that's probably where, yeah, red flags. Here we go.
Okay. So when the regulator looks at you as a reporting financial institution, certain things will flag for them. So Insufficient or inadequate AOI policies and procedures. So if you provide them with policies and procedures and they deem it to be inadequate or insufficient, they will likely audit you. The inability of the RFI to show that due diligence processes have been implemented. So it's all good and well. You have these shining policies and procedures, but if you're not implementing that, it is a problem. Large number of TINs not reported or incorrect TINs reported. So again, I encourage you to check out the OECD's website with reference to TIN formats. Large number of undocumented accounts reported or incorrect account holders reported as undocumented. So here with a large number of undocumented accounts, it might point out that your AML processes are insufficient, or with reference to undocumented accounts, you report new account holders as undocumented, and that is not correct, or you report entities as undocumented, or you report account holders with actual addresses as undocumented. That would be a red flag for the regulator. Self certifications that are not collected. The RFI is unable to provide copies of self certification to its home country tax authority. Incorrect jurisdictions reported. For example, you report a non-CRS jurisdiction as part of your submission. So with Cayman and BVI, it's quite easy not to make this mistake because the websites or the portals are hard coded with the relevant jurisdictions only or reportable jurisdictions. Whilst with Jersey and Isle of Man, as an example, you can submit consolidated reports and you can submit basically any jurisdiction, and it's your responsibility to ensure that you do not include unnecessary information that breaches GDPR. Significant data gaps in your report, reporting format issues, and late submission repeat offenders. So if you're submitting your returns late year after year, it's an audit red flag. Moving along, I think we
We're almost
are.
there. Just for those who are asking about those jurisdiction-specific
Yes.
updates, they are a handout, so you should have somewhere in
Yeah.
your um,
Yeah.
on your screen a little, it looks like a document with a paperclip. That should be where you can print the handout right now
Yeah.
for
So
you. So please go
with
there.
Bermuda, it's only the new reportable jurisdictions. With BVI, the most important thing to note is the new compliance form that is due by the 30th of June. Um, that is a little mini desk audit that you will need to complete by the 30th of June. Um, and I've included the questions that the BVI government has provided. So it touches things like your policies and procedures for onboarding account holders, collecting turns, change of circumstances, that kind of thing. So you can have a look at that. With reference to Isle of Man, it's the recently published information on on-site visits, or as we know it, audits from the I think what is the word I'm looking for? The selection criteria, what will happen once they're on site, what information you need to provide beforehand, and what happens afterwards. So I think let's go straight to questions of people on the call now. We've got
Okay,
about 11
yes,
minutes,
we
so let's
do.
get to it.
And so Q&A. So I'm going to put your details up here so that they can reach out to you.
Yeah,
Remember too, she said she's got a blog. Avril has a blog.
yeah.
Okay, lots of questions. So let me see if I can go back and find them all. Um, okay, let's see. So there was quite a few. So here's one. What happens when one of the joint account holders is not a U.S. person? Am I still required to input a tax identification number? So I guess that would just be for the FATCA side reporting.
You would only report the FATCA side. You wouldn't report a non-US person for FATCA.
Okay, so if it's joint for FATCA, if it is a joint account
full
holder
full account balance, full distribution amount for that one person
for the one who is a U.S. tax
is
resident.
reportable. Yes.
Okay,
Yeah.
that's a good one. Okay, somebody is asking for clarification. They said, isn't Bermuda FACA March 31st? But you said earlier it would have been set by
Yes,
the
that's
tax.
that's in country as well. I think Bermuda's the one that's Model 2.
Oh, is it Bermuda that's Model 2?
Yeah,
Okay.
Bermuda's
All
Model
right.
2. That's why their FATCA deadline is now.
Okay. All right. So that is great. Thank you. How many years after the account is closed will the closed account be reported for? I mean, is there a close for 4 years, 3 years, or has that been
No.
determined yet?
So if you are reporting this year and say you have an account holder whose account closed during the course of last year, then you will report for FATCA the final balance just before the account closed, as well as the final distributions made, and you will flag the account as closed on your actual XML or manual return. So with BVI, with the manual submissions, there's a little tick box, is the account closed, which you can tick. And then I think with reference to the CRS, if you're doing it manually as well, the XML schema also has a column for, is the account yes closed, yes or no. Um, that will be the 1 year only, and you will report it for this year, for BVI being May this year, and for Cayman Islands being July this year. You will not need to continually report it as closed afterwards. You will, however, need to hold on to that information for the number of years that your AML requires you to hold on information. So it could be 5, it could be 6 years that you need to hold on to it, in case the regulator comes back with any questions for that particular account holder.
Okay. So they're not having to report the closed date, just that it is
No,
closed for that
just
period.
that it's
Okay.
closed. There's a little flag that says yes.
Okay. I'm reading through one right now. Um, okay. Yeah, this is somebody who's asking about if a trust and company service provider classifies them as he no, sorry, she says most trust and company service providers classify themselves as financial institutions.
Hmm.
Therefore, if they manage a company that is itself an investment holding entity, then the
Hmm.
entity would also be classified as a financial institution managed by rule. Is
That is
this
correct.
correct? Ah, well done,
That
Susan.
is that is correct.
I'm
So
wrapping my head around
especially
that one. Yeah.
So that is especially where it's a discretionary trust, and the trustees have full discretion over the assets of the over that particular trust, as an example. And with reference to companies, it's where the company has directors on the board for that particular financial institution. Then yes, that particular entity that's managing would also be a financial institution.
Okay. So I'm trying to get some of these others. Okay. So this is from, I think they're a fund administrator. We sometimes
Yes.
receive subscription or capital call funds from a third
Mhm.
party. We either kick back the funds or have our compliance review the third party entity and collect relevant KYC AML documents to make an exception. If in these cases, should we also collect FACA CRS self certs on the third party? And how would this, so it sounds like but if I'm putting this right, sorry, if I'm putting this right, it's like if I'm the subscription, the person who's signing the subscription
Mhm.
to invest in a fund, but maybe I send my subscription amounts via my company that I own. This is how I'm kind of thinking through this. Would she need to
It
get,
could be, I think the person needs to answer whether the subscription is being made through an introducer or
oh, that's true.
an investment entity on their behalf. So they could be going through an investment advisor or something to that effect.
Okay. Okay.
Because
So,
I'm struggling with the term of third party. So
yeah, yeah, I
if
was
it's the
too. So,
account, if it's the account holder that's named on the subscription form, so they will name the actual account holder, the actual beneficial owner, then the FATCA and CRS information must be collected for that particular account holder. If the third party is acting as a power of attorney or authorized signatory, and they indicia is outside of the RFI's or the fund administrator's jurisdiction, then the fund administrator, it's not a requirement, but they may want to include it as part of their business process that they also collect a self certification from that POA or authorized signatory.
Okay. And I was wondering this. Let's say you do have somebody who is not, has no US indicia, but
Mhm.
yet they send funds from a US account. So they're sending funds, you're not paying funds to them, but they're sending funds to you from a US account. Is
We
that
are
considered US indicia?
No, we are following the money, and with reference to bank accounts here, it's when that person receives a standing instruction. So if that person has an investment in a fund, say for example, and the fund distributes income on a quarterly basis, if that payment of that income is going to a US account on a quarterly basis, then that would be a standing instruction and that would be reportable. However, if it's a once off payment, that would not be considered a standing instruction and you would not necessarily need to report that. But where the money is coming from, you as a financial institution would want to ask clarifying questions about the origins of the funds
Hmm.
as to
Okay.
why it's coming from the US just to cover yourself, but
Okay.
you wouldn't need to report it.
Okay. Thank you. Got another question. I'm not exactly sure what they mean, but I'll pose the question. Would the total asset value be reportable for a protector of a TDT slash FI under
Yes,
CRS? TDT, what, I'm sorry,
yes,
that one's losing
yes.
me.
That
What's,
makes complete sense to me. The answer is yes. I've
okay.
received that question a lot of times. People are not happy with that. What's happening with the new CRS XML, which is 3.0, you will be able to specify the controlling person type on the XML going forward so that the tax authority receiving that information will be able to tell that it's a protector. Currently, you can't provide the details of the controlling persons reported for the TDT. You will be able to do that in future, so there will be some relief there.
Okay. What's a TDT?
Trustee documented trust.
Okay. Okay. Thank you. Okay. See if I can find some others. We got through some pretty good, got through this, a lot of information in a good time. So thank you. Okay, what about a
I'm
corporate
glad.
trust? Yeah, what about a corporate trustee of a trust? I think that one you would have to still report. Is that correct? Corporate trustee of a trust.
Is that all of the question? What about the
Yeah,
corporate trustee
I'm
of a
assuming
trust?
that means like, do they include that? So let's maybe you have there's
Um,
something.
if the corporate trustee is a financial institution, then no, you would not report the corporate trustee.
Okay, okay, all right. We've got 1 minute to go. Sorry, there were so many questions. I just couldn't quite go through them all. Um, I do try and read them after these webinars. I might share a couple with you, Avril, if you don't mind. See if
Yeah,
you know
that's
you would be
fine.
willing
That's
to
fine.
um, kind of get back to those who did
Yeah.
ask some very good ones. We were
So
talking
to those on the
earlier.
call,
Sorry, go
yeah,
ahead.
to those on the call, I do provide training. So what I've spoken about here today is at the tip of what I provide. I do provide CPD accredited training for companies and the staff. I also provide policies and procedure guidance and anything else that you may need with reference to due diligence and reporting. So feel free to reach out to me, but I'll be happy to respond to any questions that have been left on the board today on the table.
Okay. And just also to clarify, somebody was asking about self-certs. Those are not
Yes.
jurisdiction specific. Like you don't have to send a self-cert specifically for a US person versus somebody in the UK or France or Japan, right? It's just because I've seen those
Yeah,
self-certs. They're pretty standard.
yeah.
Um, yeah, and you
So
is there
yeah,
where can they
it,
go to get that on the online, these
we can
templates?
then look for self certifications.
Hmm.
So again, the archive section of the OECD, they do have I would call sample forms on their website that you
Hmm.
can download, and you can basically brand it with your
With
company's
your stuff.
logo.
Okay. And you
And that
mentioned the
covers,
OECD
yeah,
archive site because
yes,
we talked about this before the broadcast started.
yeah,
I was doing some research and noticed the OECD sites, everything that I got led to was it was marked as archived. But you're saying that pretty much that's
yes,
still good. They're just updating their website. So
that's
it
correct.
it is a bit confusing.
It is.
So yeah, right now. Okay, so these are those
It wouldn't be right if for FATCA and CRS if it wasn't confusing. So don't
exactly.
feel bad if you don't understand. It's normal.
Yeah, just I think it's one of those things you kind of have to just sit with it for a while.
Exactly.
These are those links to your blog, also the IRS FATCA FAQs, and I had to kind of wrap my head around all the Model 1, Model 2s as well.
Yeah.
So yes, so thank you again and for those. And again, we will share these slides to you for you, and we will be sharing the recording. It takes us a couple days to get that out, and so please keep your keep an eye for your emails. Now, again, thank you very, very much. Right after this slide too, I do have some upcoming topics, but again, Avril, big thank you. This is a
My
huge,
pleasure.
complex subject, and it's great to
It is.
have a subject matter expert just giving us a quick hour to let us kind of know what we don't know here and
Yeah.
some updates. I'm getting a lot of kind of thumbs up and thank yous
Yeah.
already on the screen.
Yeah.
So thank you very much.
I
And
normally do this over 3 hours, not 45
not an
minutes.
hour. Exactly.
No.
And I do recommend, I mean, people do reach out to Avril and,
Yeah.
book some training, especially if you've got a pretty big team. I find that when I'm working with people on the AML side, I sometimes have to find out, like, we kind of go through like project planning. Like, okay, you got to do
Mhm.
this. Now, which in your team is going to go do that? Which reports, which
Exactly.
systems? We really go in depth to find out not just, yeah, you got to go find all your customers, with US and DSHA on them. How are you going to do that? What reports? What
Exactly.
systems? That's
Exactly.
the that's where you've got to pin that stuff down,
Yeah.
um, either
So, yeah,
internally or externally.
I don't
Yeah.
just deal with the theory side of things. I've been on both sides. I've done reporting and I've submitted reports for many years, so I understand both ends.
Mhm.
So it won't
Yeah.
go over my head if you ask me a reporting question either.
Yeah, yeah. So, and again, understanding your own internal, um, or each financial institution's, systems that they use. Like, where would you go for this?
Exactly.
Where do you go? Because, you might have some of the information in a transaction system and some of the information in your compliance system. Some of the information in your corporate systems if you're a corporate service provider,
Hmm.
but yeah, it's
Yeah.
quite complex to go to
Yeah.
project
And
manage this stuff. Yeah.
and
Okay.
if you're looking for a good XML system that's very easy to use, you might want to contact Transworld Compliance, because out of
Hmm.
all the systems I've seen out there, theirs is the best I've seen so far.
Yeah, it's very thorough. They've given us their
Yeah.
templates as well for ours is for the silo system, so we are putting we've already got an older version in silo
Hmm.
that then pulls all the various states. We are updating it with the, like is the account closed, those kind of columns as well. So we'll be updating that, and we're adding some new fields in Silo as well to help
Yeah.
our users that have FACTA and CRS reporting obligations, so they can just quickly pull it out, quickly find, and I'm trying to find some tips or some ways so that they don't have to go through tons of reports to look for the indicia. The
Exactly.
system will tell you,
Exactly.
hey, this has got some US indicia. They need to be on the FACA, thing. So we're trying to find
Exactly.
ways to do that too. Okay, so thank you again, and thank you for all of our newbies who are joining us for the first time, and for obviously those I recognize your names, those who've been listening in for years. Upcoming topics for gray matters. We've got the reports for board engagement, regulatory enforcement. That's a 2-session top broadcast, audit prep, periodic reviews, and I don't have the date yet, but another one is AML, the right career for me. That will be for people who are considering getting out of AML. Maybe you're frustrated, overwhelmed, because I do hear a lot of people concerned with just the workload. Um, so do join us, but it will also be for people who are considering the career or in the middle of their career, looking, trying to figure out, do they invest in certifications and more degrees and things like that, or and also I'll try to address as well the, what to look for when you're hiring an AML person. What kind of skill sets do they need? So I do hope you can join us for those. Again, thank you very much for 6 minutes after. Um, I will be looking forward to having you all join us again. Oh, one other slide I did forget is I am hosting the Zen and the Art of AML Compliance. That's 14th May. Keep your eyes out for that particular email inviting you to that as well. That'll be like a 2-hour course, live and interactive. All right, Avril, again, thank you so much. Thank you too to the Trans World Compliance guys, TWC, for introducing us. I really appreciate it. If anybody needs to reach out to Avril, please do so. Follow her. Thank you, Avril, and
Thank you
thank
so
you,
much for
Tom.
having me.
Okay, thank you. Bye.
Thank you, Tom. Bye.